Mark Matthews, head of Asia Research at Bank Julius Baer, joins us on the program right here in our First Up studio this morning. Good to see you once again, Mark.
Good to see you, Susan.
Good Monday to you. I guess we got to start off with China because, I don't know, it's probably not surprising to you, Bank Julius Baer, considering you're expecting 7.5% GDP growth for China for 2012. But it looks like the government itself has set a lower target. It's lowest since 2004. Any concerns for you that, it looks like China is now going to tolerate slower growth?
Well, I think, what is it, a $5 trillion economy now? So it'd be very dangerous for them to be still growing at the double digits. It's just not sustainable. So I'm much more comfortable and happy with China growing at 7.5% than 10%.
Yeah. It's very hard to get a right balance when you have 1.3 billion people. Sometimes, it's always going too fast or it's growing too slowly. What about the inflation target of 4%, though? Any concerns there?
Hard to know because, food depends on the weather, and in China, the supply of vegetables and pork is so intransparent. It's just hard to know. But I think that 4 is probably on the low side, probably more like 4.5 for the full year. Yeah.
And then that's not concerning to you when you have inflation running at 4.5, if that's already on the low side of their targets, right? So you're expecting inflation above 5%, I assume?
No, I said 4.5. So I think, no, I think that would be fine. No,
yeah?
I think 4.5% with 7.5% GDP growth would be perfectly tolerable. I mean, it doesn't make it the best story in the world.
Right.
But it's not terrible either.
Exactly. But China's trying to make it a better story. I think they're pumping in more money into the economy. We just heard from ICBC's president talking about $3 billion more loans pumped into the economy. Is that encouraging to you? That looks like China's loosening up the taps?
Well, to be honest, Susan, I mean, the thing that for the last few years has I guess, bothered's not the right word, but kept me back on China is that it is all so much about policy that I just sleep better at night investing in things where I'm studying companies, I'm studying the real economy instead of trying to second guess what some person in Beijing is going to do the next day. So I don't like constantly trying to forecast into the future for policy making in China. I'm no expert on it.
Okay, so what are you saying then, that you want to avoid China? Is that what you're saying?
I think China's the most important asset class in the world to watch, but not necessarily to invest in. That's the way I'd put it. I think that the large overlay of policy demands a discount. And the hate shares are something a little bit different because they correlate more closely to the S&P and the rest of the world than the A shares. So if we're in a bull market now globally, which I suspect we are, I suspect hate shares will outperform, not because of what's happening in China, but just because they are a big beta play on the world.
Right.
A shares, I think, will be fine this year, but I don't think they'll be the best asset class in Asia.
Okay, so what is the best asset class in Asia?
I like Taiwan technology, yeah, because it's badly lagged the NASDAQ over the last 2 years. And in part that's because they just make stuff. They don't have Google or Apple. They just put stuff together.
But
and
Apple
sell
buys
it.
a lot of components from Taiwan.
Yes, Apple does.
Yeah.
And but I like it more for the PC side. I think everybody's sort of relegated Microsoft to the history, and I think that's a big mistake. And I think we've got a major refresh coming up now of all of Microsoft's products, including, most importantly, Windows.
So who do you like in Taiwan? Name some names.
Asustek and Acer. Yeah. Those would be 2 good stocks to own.
Yeah, the PC, that's interesting. So you are looking at the PC side. So Taiwan is the best story across the Asia-Pacific, you think, for this year?
I think it's a good story. I think it is a good story. I think Thailand remains a perfectly good story. The floods last year held them back. There's a lot of catch-up. I think Japanese cars are really good over the next 12 to 24 months because Toyota, Honda, Nissan, they all got so badly hurt by the tsunami and then the floods in Thailand and the recalls in the U.S. And everybody thought that the U.S. was going to go into a recession. And now the car sales in the U.S. are very, very strong. The U.S. is still the biggest market for Honda, and I believe Toyota as well. Okay. And they're still very undervalued compared to the European car makers.
So you think we're in a bull run scenario here in the Asia-Pacific, well, globally, really. So how much do you think I could make if I put in money now?
I'm not comfortable putting numbers on those kind of things. I'm just not. But it's good enough that I would feel confident buying today.
Okay, so double digits maybe?
Yes.
Okay.
Yes.
Look forward to that then. Thanks, Mark.
Thank you.
Mark Matthews of Bank Julius Baer joining us on the program.